Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're talking about property tax increases for partial transfers of property. We'll be covering these rules in detail, as well as some planning ideas for these transfers at our 2022 summer tax webinars. You can see a full list of topics and get registered at caltax.com under the Webinars tab. A change in ownership of real property results in a reassessment for property tax purposes for the portion of the property that changed ownership, unless an exclusion applies. This is true whether the property is transferred by sale, gift, inheritance, or any other transfer of ownership. But the rules are a little different when the property is owned directly versus when it's owned through an entity. When property is held through a legal entity, if there's a change of more than 50% of ownership of control of that entity, all of the real property owned by the entity is reassessed for property tax purposes. It's important for clients to understand the differences in these rules before they put their property in an entity, especially if they're considering selling or gifting interests later. When a property is held directly and any portion of that ownership is transferred, the new owner's interest is reassessed to fair market value for property tax purposes. Even if more than 50% of the ownership is transferred, only the new owner's portion is reassessed. For example, assume Abby, Brian, and Chris own a property as joint tenants. The property has a fair market value of $900,000 and an assessed value for property tax purposes of $600,000. This means each joint tenant has an assessed value of $200,000 for property tax purposes. Brian sells his interest to Dawn for $300,000. Dawn received an undivided one-third interest in the property, and only her one-third interest is reassessed to $300,000. Abby and Brian each still hold a one-third interest with an assessed value of $200,000. When any legal entity or any person directly or indirectly obtains control or ownership of more than 50% of the total ownership interests or voting shares of another legal entity, there's a change in ownership, and all of the California real property owned by that entity is subject to reappraisal. This is true even if the percentage change in ownership happens through multiple transfers. Once the total cumulative change from the original ownership is more than 50%, a reassessment is triggered. For example, assume that Missy and John each own 50% of the stock of Corporation X, which owns an apartment complex. In 2020, Missy sells 30% of the stock in the corporation to Frank. There's no reassessment on this transfer because not more than 50% of the ownership in the entity has been transferred. In 2021, John sells 25% of the stock in the corporation to Edward. Now, a total of 55% of the original ownership has been transferred, Missy's 30% plus John's 25%. So the apartment complex will be reassessed for property tax purposes. Clients who are considering transferring assets to their children should consider not only income and estate tax ramifications, but also property taxes. With the elimination of the parent-child property tax exclusion for real property that's not a principal residence, property tax increases have become a much larger concern for families passing real property from one generation to the next. We cover property tax issues in Spidell's California Tax Letter. If you don't already subscribe, you can see a full list of benefits of this monthly publication at caltax.com under the Publications tab. That's all for this week. Join us next time for another episode of Spidell's California Minute.